All right, first things first, have to wish a speedy recovery to the president and first lady, and also anyone who has been impacted by the sickness. Now, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Obviously, we all know what's going on with gold and silver prices today, but in this episode, we're going to take a look at additional metrics to see how they have reacted as well. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Tonight, Flotus and I tested positive for, can't say it on YouTube. We will begin our quarantine and recovery process immediately. We will get through this together. So it was after this tweet was sent out at 12:54 a.m. October 2nd that gold and silver prices began rising. Now, as you can see here, Trump's tweet went out, at 12:54 a.m. Eastern Standard Time, and gold and silver started to move right after that. Alternatively, Dow futures began falling, going down nearly 500 points. But obviously, after the opening bell, the moment of truth came. And because in a very volatile event like this, you couldn't just expect gold and silver to remain high while, this was also up, the VIX. So the VIX, went up from the mid 26s and shot up to 29. And as we've been seeing in recent times, if the VIX goes up, it takes as many assets out as it can. So now the president finds himself a part of a group of leaders and senior officials who have contracted the issue. Now, you may remember Bolsonaro making his announcement back in July. Gold prices went up that day. When Trudeau announced that his wife contracted it, the VIX went up and significantly went up on March 12th, but it brought gold prices down even more rapidly after that. So depending on who it is and likely what's going on in the world at that time, it could impact prices in various ways. But what we can say is that if the VIX rises, prices will likely lessen. Now, let's talk about some fresh economic data that we got today. Now, I think you guys will find this pretty interesting. We just received the final non-farm payrolls numbers before the election, if you think about it. We've been hearing a lot about layoffs in recent days, but how has job growth gone? Hiring slowdown. Jobs gain falls far short of expectation. So let's get into it. Non-farm payroll rose by a lower than expected 661,000 in September, and unemployment rate was 7.9%, the Labor Department said Friday in the final jobs report before the November election. Economists surveyed by Dow Jones had been expecting a payrolls gain of 800,000 and the unemployment rate to fall to 8.2% from 8.4% in August. The payrolls miss was due largely to a drop in government hiring as at-home schooling continued and census jobs fell. The issue is momentum, and I think we're losing it, said Drew Mattis, chief market strategist for MetLife. When you go through a significant disruption to the labor market, it takes time to fix itself. That's without regard to whether there is a blink. So here's a chart of monthly jobs growth. As you can see, since about April, May, June. So since June, we've just been on a downtrend for jobs growth. No matter, the better than expected August numbers due to the census workers and school teachers being hired, after all that kind of petered out, September was left looking like this. But let's continue to dig more into those numbers. The decline in unemployment rate came along with a 0.3 percentage point drop in the labor force participation rate to 61.4%, representing a decline of nearly 700,000. However, a separate, more encompassing measure that counts discouraged workers and those working part-time for economic reasons also saw a notable decline, falling from 14.2% to 12.8%. Now, I'm going to pause right here because for those of you who may not have ever been in that position, it can get very discouraging to constantly be putting out applications and not getting any feedback. And that's one of the consequences of modern job applications, because many people apply online now. The unfortunate thing is that, well, the fortunate thing is that you can see all of the potential jobs that are out there. The unfortunate thing is that so can everybody else. And people will spam all of these jobs to the point where, you know, your application, your resume may not even be looked at. So it can be very discouraging sometimes to see, you know, a job that you think you're qualified for, but somebody who isn't qualified for will apply for it as well just because they can. But let's continue. The unemployment for blacks was even sharper than the headline rate, falling from 13% to 12.1%. The Asian rate declined from 10% to 8.9%. Leisure and hospitality led job gains with 318,000, while retail added 142,000, and healthcare and social assistance increased by 108,000. As expected, government was the biggest drag on the month, losing 216,000 due to a drop in local and state government education, as many schools maintained at-home instruction. A reduction in census workers also pulled 34,000 from the total. In other sectors, healthcare and social assistance gained 108,000, professional and business services contributed 89,000, and the transportation and warehousing sector was up 74,000. Manufacturing grew by 66,000, financial activities added 37,000, and the other services category rose by 36,000. Okay, so the outlook for Main Street right now doesn't look too great, but there may be something that could turn the tide a little bit, possibly, and it's this. House passes $2.2 trillion Democratic Romney's stimulus bill. Now, with everything happening in the news, you may have forgotten that this actually passed in the House last night. So let's dig into the details here. The House passed a $2.2 trillion Democratic stimulus plan on Thursday night, even as Democrats and the Trump administration struggled to strike a relief deal. The chamber approved the legislation in a 214 to 207 vote. 18 Democrats voted against the measure as lawmakers in competitive districts grow wary of the ongoing impasse over aid. The bill likely will not get through the Republican-held Senate and become law. Senate Majority Leader Mitch McConnell has opposed the legislation as his caucus resists spending trillions more on the federal response to the issue. The vote followed a Thursday conversation between House Speaker Nancy Pelosi and Treasury Secretary Steve Mnuchin, in which they did not forge an aid agreement, but agreed to continue talks. I'm just going to stop right there and head down to what's in the bill. So this is what is in the bill. Reinstate the $600 per week enhanced unemployment benefits through January. Send a second $1,200 direct payment to most Americans. Give $436 billion in relief over 1 year to state and local governments. Authorize more money for a second round of paycheck protection loans for the hardest hit businesses and industries. Send $25 billion to airlines to cover payroll costs. Inject $75 billion into Romney's testing and contact tracing efforts. Put $225 billion into education and $57 billion into childcare. Set aside billions for rental and mortgage assistance. Now, this is pretty interesting because if you take a look at some of the news recently, we've had some layoffs, some furloughs in the airlines industry. The fact of the matter is that there's a chance that this may not pass, and this might be one of the final opportunities, I guess, before the election in order to get something like this passed. So the airline industry may be suffering from that, with the Paycheck Protection Program not being extended. Small businesses may be impacted by that. And then obviously not reinstating the $600 per week and getting that $1,200 bump in pay for most Americans. That may also impact Main Street as well. Now, in the near term, that could be a potential issue. And I don't want to get too ahead of myself here, but the fact that we're seeing very slow non-farms payroll jobs growth, the fact that we're also seeing a lot of layoffs, it feels like we're starting to cross the Rubicon a little bit, economically speaking. Now, to me, it's a little bit that's just my opinion, but to me, that just tells me to prepare, and by prepare, I mean stacking that fiat for short-term bills and quick pivots, and also stacking more gold and silver. Let me know how you guys are preparing for this. Just want to send you this information so you can draw your own conclusions. You don't have to listen to what I say, just my opinion. But let me know what you guys think in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.